Good morning. Let's just call this particular video a little bit of perspective. Now, I called it a PSA, so instead of a public service announcement, let's call it a perspective adjustment, because y'all, the real estate markets all over the country have been cooling off for some several weeks, and when you talk to any economic guru or financial wizard, they'll tell you soft spot in the economy right now is real estate, and they don't really have a good reason why, because we now do have some inventory cropping up all over the country, and we have houses that aren't selling as quickly. And the first thing people usually tell y'all is that interest rates have gone up. And when they say that, y'all, people act like it is a pearl clutching moment of, oh, Lord Jesus, please help us. All the interest rates are going through the roof. It's very Chicken Little, which is kind of out of control. So I wanted to provide for y'all some perspective this morning. First of all, I'm directing this a little bit at my millennial friends, primarily not because y'all are doing anything wrong, but y'all have lived through an entire decade of what we have called historic low interest rates, and they are historically low for the past 10 years. In fact, some of y'all think that 3% is normal on a 30-year fixed. Some of y'all even thought 2.5% was normal on a 30-year fixed, and it wasn't. That was a moment in time. And frankly, a lot of y'all just got mad because you could not refinance and get those low rates because your equity was all messed up during the dark years. And I get that, and you're still kind of mad about it. And I don't blame you for that, but that's just how life goes. So when you are a millennial and you're just now fixing to buy a house and you've been 10 years in the making for it, let's just say you're 28 years old. Well, you were 18 when the markets were in the toilet and stayed down there for a while, so you really don't understand the historic piece. And so that's where I want to give y'all a little bit of perspective, because I'm a nerd and I love to share my nerdiness with y'all in the world, because you know you don't want to do any of the research that I do. So I pulled up historic interest rates, 30-year fixed rate, and I looked at data going back to 1971 and made my little Excel spreadsheet. When I did that, I ran the average, because one of the fun things about using things like Excel is you don't have to sit there and plug the numbers in anymore. Now you can mash a button and it will tell you the numbers. So what I did was, look, I'm clicking and clicking and clicking here because that's what we do. If I mash the buttons for an average on that 30-year fixed mortgage rate, y'all, it is 8.16%. Now let's think about that for a minute. Right now, you're just under 5% on a 30-year fixed rate, as opposed to historic. Since 1971, that's 47 years where your average over that time frame is 8.16. And those of us that have been in real estate for a while will tell you that we remember the days when that was still looking like a dream world. Y'all, my first house that I bought in 2001 was at 11.75% interest. Now, was I glad to get a note? Yes, I was glad to get a note, because that was my first house, and it was me, single girl, buying my first house. And frankly, that's our biggest demographic of buyers right now, y'all, is this demographic that is single women buying houses. So I feel like I was a ground shaker breaker at that time. So 11.75 was my interest rate, and I was glad to have it. Now, was I scared to buy a house? Yes. Was I nervous about what was going to happen in my life? Yes, because you never know when you're in a commission world if you're going to have another closing or not, but it worked out okay. So what I want to tell y'all is that when interest rates are at 5%, first of all, be grateful. Second of all, it's going to be scary no matter what the rates are, whether it's 1% or 14%. It's going to be scary, and that's okay, because it is a big decision. But what I'll tell you is that it's not a bad decision. And here's another data point y'all ought to know. I looked at the numbers in Charlotte, North Carolina for rents, because rents are out of control here, and I know in your market it may be just as bad. So our average rent in Charlotte is $1,400 a month. That's where we have a problem with affordability, y'all, because our working poor don't really have a lot of good options if they can't buy because their credit's not ready or they don't have a little down payment, although there are down payment assistance programs that you should ask your realtor about. But if they want to rent, y'all, they're in a world of hurt, because a one-bedroom apartment is still $1,235 a month. When I was renting, it was not that high. So you're going to need about 4 roommates, I reckon, to make it through. So that's where men do have an advantage, because y'all are much better in roommate situations than women are, because we need more bathroom time. So if $1,400 a month is your rent, let's talk about if you can buy a house. So I ran some numbers, and I used a 5% interest rate, because again, we're hovering just under 5%. In Concord, where my office is located here, so hey, from Cabarrus County, our average house price is $234,000. So if you plug in your interest and your property taxes and your insurance, it looks like your house payment's going to be right at $1,450. So that's right there at the average rent for an apartment. That's the same thing, y'all, and you own it and you're paying it down. So yeah, it's scary, but it seems kind of crazy to me that you would rent if you haven't checked out your options. And in Charlotte, which is of course the big city, their average price there is $303,000, and we love selling houses in Charlotte where taxes are a little bit higher. But say you bought the average house there of $300,000, that's a $1,900 a month payment. Still not that much more than rent for an apartment, and there's lots of houses below that price point if you want to watch your budget. So what I want y'all to understand is that, first of all, 5% is not high on interest rates, and if you are somebody who bought your house at a higher rate than we're at today, I'm going to ask you to tell the world what your rate was so that you can provide some perspective. And if you are a young person or a first-time buyer of any age, I want you to call your realtor and let us talk to you about a little bit of perspective, because it's kind of making my stomach hurt that y'all are paying this much in rent and you don't really have to. So think about it, give us a shout, because we'll help you make it over the finish line. And by the way, y'all, it's all right to be scared, but the advantages long-term are huge, because, by the way, I still own my first house and now it's an investment property.